Thank you for joining me today. And we will be discussing the market developments and our outlook as Standard Chartered Bank Research with regards to what's going to happen from a global markets perspective, regionally and also locally. From a global markets perspective, what we'll be looking out for is the US Fed decision. Why this is important is if they signal a November tapering decision, then that may affect the investor perception of emerging markets and frontier markets. How that may affect us locally is that the Nairobi Securities Exchange daily turnover is largely accounted for by foreigners, and their investment perception of the country, dependent on the global markets movement, would affect the performance of the equities market in the coming months. From a global markets perspective, the IMF Board of Governors approved a historic increase in the SDR allocations, also known as the special drawing rights, or plainly the IMF currency. The amount is a staggering $650 billion. This is going to be proportionally distributed to the IMF member countries, for which Kenya is one of them. As a matter of fact, we've already seen these SDR allocations coming into the Kenya FX reserves of amount $738 million that has boosted the FX reserve number to about $9.6 billion, which translates to 5.9 months of import cover. The East Africa criterion is about 4 months of import cover, so this is a healthy level indeed. To a more topical theme, international oil prices were actually 1.5 times higher back in 2011 than they are now. But the domestic pump prices are at record levels. This could result in inflationary pressures. But we are also cognizant of the fact that the fiscal position has weakened in the last decade. This could be because of the infrastructure projects that the government has taken to open up the economy. However, because of the weakened debt position of the country, we may see the government looking to raise more revenue through additional taxes. Hence the reason as to why we may be seeing higher domestic pump prices. Even in the face of inflationary pressures in the coming months, we still expect the Central Bank of Kenya at its upcoming Monetary Policy Committee meeting to maintain its policy rate on hold at 7%.